Hello, traders and investors. My name is Frederick, and this video is brought to you by the FST trading community. And in this session, we'll be covering the most important and the most vital aspect of the market that most traders have been neglecting or don't know how to go about it. But in this video, we would be making it quite very simple for you to understand and position properly for your trade in the coming week, right? Now, let's delve into the fundamentals. And this is one aspect of the market most traders neglect, and that's why you'd see a lot of traders taking the opposite side of the trade. Basically, the fundamentals shows you the direction of the market. The sentiment shows you how traders are aligned, how they're positioned, and you can now go down to your technicals, to your charts, to really spot out areas of value where you might want to trade your take your profitable entries from, to position the right way, right? So that's why we'll be covering this session to make it well explained and you understand why the market is going the direction it's been going over a given period of time, right? Now, let's quickly start from the Canadian dollar, and we are starting from the November 1st, 2024. We're starting from November, and let's really read what these are all about, right? We're seeing S&P Global Manufacturing PMI reading at 51.1. It was better than expected. They had a trade balance that was negative for the Canadian dollar, right? Now, look at the S&P. What does this cover? It shows you the strength in the manufacturing sector of the economy, and this is very good for economic growth, right? This is good for the currency. It's good for the overall strength of the currency. Now look at these. The S&P Service PMI. You could see that it also came out better than expected. This means that the manufacturing and service sector of the Canadian economy is performing very well. And this is vital for GDP growth and all of that. So it's a good data we're having here, right? And it should be positive for the Canadian dollar in the long term, right? We had unemployment rates reducing from previous 6.6%. We have point one discount in the unemployment rate. Unemployment change came out way worse than previous, but and it's below expectation. But that's not totally not good for the labor market, right? But we still have these data that are really strong, right? That would influence the Canadian dollar positively, right? We go down and we see the CPI came out 2.6%. Everything here is better than expected. So we are having more data that are better than expected here, right? And this CPI, it's reading inflation rates, the CPI and the inflation rate. It's telling you what the Bank of Canada is likely to do in the next interest rate decision, right? When you're having high inflation, you are likely not to cut rates, right? And you are likely to even hike rates to combat inflation, right? So we perceive these data to be positive for the Canadian dollar, right? And then we go next to retail sales, and retail sales came out better than expected on the 22nd of November. And we had retail, other aspect of retail sales, though the September year over year, it came out worse than expected, but overall we are still having stronger data, right? GDP growth went down 0.1%, and we had the GDP growth annualized, it came out at 1%, right? From previous 2.2%, like standard market expectation. It's met with the market expectation, right? Now, December 2nd, the first data we had was S&P. Maybe due to the holiday, it was unable to be, it was not processed, it's not been processed yet. The global and manufacturing PMI, and then we had the trade balance, which was, you know, I would say it's worse than expected, right? But it's better than the previous. That's one thing most traders don't really pay attention to. It could beat the consensus, right? Price could go below consensus, but you should compare with the previous data and you'd see that okay, there is slight improvement, right? So there is improvement for me in the longer term. Maybe for the short term this would have been negative for the Canadian dollar, but the longer term investors will perceive this to be resilience, right? Mm. Then we go to in the employment change. We had way better than expected data. We had unemployment rate at 6.8%. Um, that's 0.2% increment. Canadian dollar had hard times, right? The labor market is something they've not been able to really, deal with 50 basis point interest rate cut, right? And this rate cut is to stabilize the flagging labor market, right? The labor market needs strength, and that's why we saw these rate cuts right here, right? We had inflation go down from to 1.9%. Then we have the January S&P. These data would still be processed in future. It's not processed yet. And other data we had was the unemployment rate. Unemployment change came out better than expected. Unemployment rate reduced. Why? We had rate cuts. Tada, remember? So anytime you have a rate cut, it's a kind of the decision the banks make stabilize the flagging labor market, right? So we have January 21st, 2025. We're expecting the inflation data, right? The CPI and the inflation rate data year over year. You should also consider geopolitical factor. Example of these is increase in oil, the demand for oil. Oil prices have been going up. Oil being one of the major sources of revenue for the Canada, and if there is demand and it's going up, it would likely influence the economy positively, right? So this is what you should know about the Canadian dollar, and I'll be breaking this down in coming video, talking about other currencies and giving you clues on how the currency is performing. So let's check overall performance of the Canadian dollar month to date, right? And for that, you can see here it's pretty resilient over time, right? We've not had major declines. It's one of the strongest currencies, the second strongest currency after the US dollar. Overall, the economy has been resilient, right? And that's why we are seeing this trend in the month to date relative performance of the Canadian dollar, right? So that's what you need to know about the Canadian dollar for today. And in the coming video, I would cover other videos: the USD, JPY, AUD, NZD, CHF, and the Euro, GBP too. So you get to know what is happening economically, and the best pair to trade. You would be able to see 100% of the market, and you would know how to go about things. Right? Thank you for watching. My name is Fred, and this video is brought to you by the FST trading community. Stay tuned.